While looking into our magic crystal, we can see that the market sell-off has created many bargains for investors, but perhaps it's too soon to call the bottom. However, if you are a deep value investor, you need to turn more aggressive when you're given good chances. Again, this may not be the bottom, but this is certainly a time for serious consideration. Stocks have plunged and the U.S. credit markets are suffering their worst days in a decade as fears intensify that the spreading coronavirus will hurt corporate income and some companies' ability to repay debt. But the scale of the crisis depends on how long it lasts, maybe as long as 18 months to develop a vaccine. However, you need to decide if you're an investor or a trader. Since I see myself as an investor, I look at stocks to see if there is long-term value, and I take the opportunity to buy. If there is long-term value, 18 months is not a long time. But don't be too concerned if you think you missed some opportunities. You just may get another chance. So, let's take a look. Today we're going to be quick and look at only two charts. It's important to understand that most often investors get more than one chance to land a good investment. So even though the most veteran of traders were shocked by this week's moves, stay calm and watch as events roll out. Try to keep your composure and just observe from the sidelines if you need. Don't get caught up in the panic that moved up a few notches from already extreme high levels. Many had thought Friday of last week was the blow off top, but this Friday showed that it may not be over. The flip from extreme greed to extreme fear was unprecedentedly fast. But look closely at the lower part of the chart. We may stay in the red zone for much longer as we did in early and late 2018. This will give you the time and multiple opportunities to find some great bargains. So make sure you're searching for some deep value bargains. With stocks tumbling, the VIX, which is also known as the fear factor, soared. Last week, we approached the level of 50 on the VIX, and that's why I began buying. VIX at 50 or near 50 oftentimes is the apex level of fear. But this week, Friday, the VIX reached the level of 50 again, but it went slightly beyond. These levels are higher than we have seen since August of 2011. But again, look closely at the chart. The VIX eruptions come in twos. So although this particular eruption may calm in the coming weeks, be prepared for another eruption in about a month or two. But we'll know because we're going to be watching. So stay tuned, but make use of your time. Study for some good opportunities of some bargain stocks. And for today, that's ChewDog Charts. Thank you.